What's up, guys? In this video, we're going to be looking at the top 3 penny stocks that are in the oil and gas sector. We're going to be looking at exactly the price point levels that we can use to get involved in it. We're going to look at the technical, the fundamental analysis. So make sure you stay tuned. Now let's get right into the video. Alright guys, so before we get into the video, make sure you like the video. If you are new to the channel, make sure you subscribe. Now, before we get into the video, we covered 3 stocks in our previous video. One of the stocks was IEZA. So this stock's actually spiked up very good. It's currently trading at around $2.82, up 29.95%. So if you got involved with it, make sure to lock in the profits, or if you have a specific plan for it, make sure you execute your plan for your profit taking process. So also the other stock that we talked about on our previous video was LPTH. We're looking at it for the break. It actually broke out. It was a multi-day breakout strategy. It broke out. It went to $3 and it eventually continued to spike up to above $3.50, and now it's pulling back. So if you haven't locked in the profits on the previous day, yesterday, then the stock actually pulled back. So make sure that you have a solid plan, because these stocks can actually go up very good, but sometimes they can pull back faster than they went up. So you have to be super careful. Just like the overall market, what happened today, it pulled back a lot. So it went up for 7 days straight up, and it just gave back all of the gains within today. So you have to be super careful. And the other stock that we also looked at was XELB. So we were looking at for this stock to hold the $1.40 on the video. So it did not hold the price point, the support area that we marked for it. So eventually it went down drastically to the price point where it broke out. So it's currently trading at $1. So this can potentially spike up again, because it's right now at a support area that it broke out of. So what you can do is, if you can still watch this stock, but make sure if you took a loss on anything like that, make sure you close out of the trade. And if you want to trade it in the future, make sure the volume comes up again. So these are the recap for these stocks, guys, for the past 3 stocks that we looked at. But now let's get back to the video. The first oil and gas penny stock we're going to be looking at is going to be OAS. Now, this stock has been beaten down just like the rest of the sector has been beaten down. The oil and gas sector has been getting crushed because of the Russia and the Saudi trade oil crisis that happened in the past. So the stock was actually trading at around $3 and $2.21 area, and then it just crashed to 37 cents area. As you can see over here, the 52-week range for the stock was between 24 cents to $5.92, and eventually it kind of recovered and it broke out to at about $1.30 to $2, and now it's pulling back. So if you believe the oil and gas sector, if the sector is going to be recovering, these are the stock that you want to watch, because it technically broke out. But the other thing that you want to look at is exactly the 1-year price target. So the 1-year price target is at 69 cents. As you can see, it's kind of over that price point right now. So this is one of the things that you want to be careful with these oil and gas sectors, because the majority of them are going to be losing a lot of revenue. However, these companies might still file for bankruptcy, or they might still be on risk of bankruptcy, but they can still go up and spike up to the upside a lot. So you can quickly trade them, but just don't hold them. That's just my advice. But anyway, this stock, the market cap is going to be $317 million. When you look at the stock in general, technically, as you can see over here, it kind of broke out of the area of the 98 cents to $1 area. So this is the resistance area that we used over here that it broke out. And when it broke out, it just went straight up to $2. And now it's pulling back significantly to the downside, because the overall market and the energy sector is kind of pulling back right now as we speak. Now it's currently back to the support area or the resistance area that it broke out of the 98 cents area. So it's a good opportunity if you want to get involved in it by risking this area, but be super careful, because if it breaks down, there's still going to be the 200 and the 50 or the $20, the 20 simple moving average support area over here. But still, this can continue to go down and go back to the 50 cent area. So you have to be super careful with it, but it's right at the support area of the 98 cents area. So the other thing you want to do is the share of outstanding for this company is 316 million. So there's a lot of shares available for it, but still, if there's momentum, if people are wanting to buy the energy sector stocks, penny stocks, they can still spike up to the upside a lot. As you can see over here, institution ownership is 84%. So this entire company is owned by institutions, and that is one of the things that you want to be looking for. It cannot be manipulated by retail investors or chat rooms. So the majority of these penny stocks can be manipulated by chat rooms, but this is owned by institutions. So you need a lot of, the overall sector to bounce back for it to kind of pull back to the upside, so you have to be watch out for that. But let's move on to the second stock, guys. All right, guys, before we move on to the second stock, make sure to like the video if you are new to this channel and subscribe to the channel if you are new. Also, let's get to 100 likes. The previous video, we hit 300 likes, guys. I really appreciate it. Let's try to break that and let's go to 350 to 400 likes, guys. I really appreciate it. So the other two stocks that I'm going to be covering is going to be from this list of the fastest growing oil and gas penny stocks. One of these stocks actually it went up significantly. Now it's not currently a penny stocks, but the two stocks that are still below the $5, I'm going to be covering it. The first stock that I'm going to be covering is going to be ticker symbol CLNE. Clean Energy Fuel Corporation is a producer of renewable natural gas. That means it creates natural gas from decomposing organic waste rather than extracting it from underground deposits. So what this company is all about is it produces gas naturally. This company is $429.98 million, and the 52-week range is between $1.05 to $2.93, and the 1 year price target is actually $5.50. So that is one of the good things that you want to be looking for, because there's going to be good potential for this stock. If it starts to go up to the upside, it will definitely go to the upside. As you can see over here, the year to date, it is definitely trending up to the upside after it hit the low of all the Russia and Saudi Arabia issue that kind of happened. And it started to slowly trend to the upside over here. Now it's currently pulling back to $2.14, basically the area that it kind of broke out over here. So as you can see, the average volume is kind of similar. It did not increase that much. It basically trades 1.1 million. It traded the same amount of average volume as it did in the past, and the EPS is 0.1590. So that is one of the important things that you will be looking for if you want to get involved in this company. The 1 year price target is $5.50, so there's going to be a good potential for it to spike up. So as you can see over here, it kind of was trading, broke out of the level, just like the other energy sectors that we covered, that we talked about, that the sector has been recovering significantly. It went up to $2.40 area. So it kind of hit a resistance point over here, and now it's pulling back. Now, I like this stock because there's a 200 moving average, the 20 and the 50 are the support simple moving averages that we can use. But however, if that does not hold, it can definitely go down to basically the area that it broke out of, which is over here, which is the $1.80 area that we can use as a support area right now. But if these simple moving averages can help it support it, it can definitely bounce back. But this is very, very risky too. So you want to be looking for it. If you want to get involved in it, make sure the sentiment of the energy sector or people, the energy sector is going to be, you hear positive news that the oil, gas prices are recovering and things like that before you get involved in these stocks, so that is one of the important things that you want to be looking for. But however, this is still a good stock because there's good support around this area. The share outstanding for this stock is going to be 204 million. The share of the float is 132.71 million. Institution ownership is 28%. So it's not a lot of it owned by institutions. But that does not mean that the stock can actually be affected by retail investors because the float of the shares are super high. That is really, really important that you want to be looking for. So the entire sector can definitely move the stock. As you can see, all of these stocks that we looked at so far are in the energy sector. The past two stocks that we looked at. So as you can see over here, they kind of trending down together. And when they start bouncing back up together, when the sector bounces back up, they start to bounce back together too. Now, let's move on to the third stock. So, all right, guys, so the third stock that we're going to be looking at is going to be AROC. So AROC is a contract operational services company that provides maintenance, service, and equipment for oil and natural gas production, processing, and transportation applications. So this is going to be the exact function of the company. Now let's look at exactly what the company is all about. So the market cap for this company is $867 million. The 52-week range is between $2 and $11.43, and the 1 year price target is $8.38. So that is one of the things that you want to be looking for, because there's definitely going to be good potential for it to kind of spike up to the upside if the overall sentiment of the energy sector continues to be positive. So it is kind of trending slowly to the upside too, which is super important. And one of the other things that kind of attract this company is because it's not really affected by the oil prices. It's affected by, because it is kind of providing services to natural gas, that companies that kind of dig oil out of the ground. So they're kind of renting or producing equipment for that. Still affected a little bit, but not affected that much, because they're still going to be profitable oil gas companies that kind of use the service of this company. So that is one of the things that you want to be looking out when you want to invest into these stocks. There are the other companies that are directly affected by oil prices because they sell the oil prices. Other companies are actually providing equipment and things like that to the other companies that they have to use in order to produce oil. So that is one of the things. So the other thing that you want to be looking for is going to be the volume. The volume is important because that is the amount of shares traded between buyers and sellers. So as you can see over here, the average volume is 1.5. Today is kind of traded higher, which is 2.1 million shares that have been traded today. It is kind of slowly trending up. It was kind of a penny stock over here because it was below $5. Now it's kind of slowly trending up to the upside. Now let's look at the technical analysis to see exactly what is going to be a good price point for us to get involved in the stock. So as you can see over here, it actually went up to $7 after it broke out of the $5 area over here as a resistance area that we can use over here. Now it's like a support. Right after it broke out of this area, it went up to $7. Now it's pulling back drastically. So that is one of the things that we're looking for, because these stocks can take a lot of time for them to slowly grind up to the upside, but it only takes like 2, 3, 4 days for them to crash down. So you always have to have a plan where you want to execute, where you want to exit, what's going to be your stop loss, because things can change drastically, especially when they are in this penny stock world. So that is one of the things that you need to be super careful with. As you can see, it's kind of pulling back to the area where it kind of broke out of, which is $5. And also we have the moving averages over here that kind of that can act as a support. So that is one of the things that you want to be looking for. So the $5 area, if it breaks out of that area, that's going to be risky. So you have to be super careful. So the other thing that you want to be looking for is going to be the share outstanding of the company, which is currently it's 150 million share outstanding. The share of the float is 128, and 80% of this company is owned by institutions. So that is a good thing to see, because this cannot be manipulated by pump and dumps or any other sketchy chat rooms. So that is good. So that is one of the things that you want to be looking at for, guys. So these are the top 3 penny stocks that you want to be looking at for. So make sure you actually have a plan before you get involved in these stocks. You know exactly where you're going to take your profit, where you're going to put your stop loss, because things are not going to be just like IZEA. They're not just going to continuously going to go to the upside, because things might go down. So you need to have a plan exactly when you're going to stop out, when you're going to take out your profit before you place the trade. You just don't want to be holding the bag at the end of the day. So for example, if you are holding the bag, if you actually got involved in XELB, if you actually bought it right at market open yesterday and things like that, now you're going to be down because it did not hold on at the $1.40 area. So it's below the support area, the resistance area that we marked over here. Now you're just back holding, you're just waiting for it to spike up for you to go out. So you need to have a specific plan. Since our plan yesterday was, if this area did not hold a $1.40 area, we're not going to get involved in it. But if you still get involved in it, make sure you actually have a plan to get out, to sell off, because these stocks are actually trending down to the downside, and also the float of these stocks are actually low. So these are super risky stocks to trade. So always have a plan, always have a strategy in place before you buy and you get involved in this penny stocks. All right, guys. So these are the top 3 stocks, guys. If you have any questions, make sure you drop it in the comment section below. And this video is actually, one of the subscribers actually recommended exactly to make this video. I appreciate it. Make sure if you have any suggestions of what videos I need to make next time, make sure you drop it in the comment section below, so I will make a video about that. I appreciate you guys. Make sure you subscribe to the channel if you're new. I'll catch you guys on the next videos, guys. So peace out.